China's property crisis could spill over to other Asian countries and hold back regional growth, according to the Asian Development Bank. It says Asia faces significant headwinds if the Chinese property market deteriorates further. Any regional growth will be buoyed by South Asia, largely thanks to a strong public investment climate in India. The ADB has trimmed the 2023 growth forecast by 0.1% to 4.7%, and it has maintained its growth outlook for next year at 4.8%, as tourism returns to pre-pandemic levels in many Asian countries. For some more analysis, let's bring in Albert Park. He's the Asian Development Bank's chief economist. Welcome back to the program here, Albert. In the Asian Development Bank's latest report, it says further weakness in the property market could have significant consequences in China and elsewhere. How big are the problems that companies like Evergrande or Country Garden are posing?
Well, China has had a structural problem in its property market for some years, and the government is trying to address it by deleveraging what has been kind of an over-leveraged, over-invested sector in the past. And so you see in a lot of tier 2 and tier 3 cities, there's a lot of surplus housing, empty apartments. And so they're trying to put the brakes on the development a bit. And that has led in the last couple of years to negative growth rates in real estate investment. In the past, the property sector has accounted for about 2% of China's growth. And so not having that, and in fact, having it contribute to negative growth is becoming a big drag on economic growth overall. One of the concerns is that because a lot of households' wealth is in the form of housing, we're starting to see prices actually fall in tier 2 and tier 3 cities. And that could make consumers feel less wealthy and could then start to affect their consumption. And so this is why it's a concern. The Chinese government is trying to avoid rescuing the property sector by injecting lots of liquidity as it has done earlier in earlier periods, because they realize that they need to get to a more stable, kind of healthier property sector development path. But that's going to be a kind of a tight rope to manage. And so we're seeing them struggle to do that. More recently, though, they seem to be realizing they need to be a bit more aggressive in providing some new measures to stimulate demand and to support developers. So I think we'll see some response to that, and hopefully they'll be able to manage kind of a soft landing in this sector and return to more modest contributions of the property sector to growth going forward.
Albert, a decline in private consumption and private investment due to wealth and confidence effects stemming from the problems on the housing market. Aren't we right in the middle of that scenario?
Well, actually, if you look at the data on consumption and incomes in China, they were pretty robust in the first half of the year. But of course, China's also been struggling with the diminished external demand for its exports, which has really led to a struggle in the manufacturing goods sector. We're also seeing some cyclical downturn signals, high youth unemployment, for instance, reduced imports, which suggests that demand has kind of shifted more to services post-pandemic, which is kind of a normal pattern. But it means that if China is importing less goods, and in particular in electronics and manufacturing, in machinery, we're seeing that happen. That hurts other countries in the region also, because especially the high-tech exporters like Korea, Taipei, China, Singapore are exporting a lot of electronics and machinery to China, and so it's contributing to the slowdown in those economies as well.
Let's talk about that here for a second. I mean, the Asian Development Bank is servicing more than 40 countries in the region. So which ones would be most impacted should things on the Chinese housing market go downhill further?
In fact, we've studied this problem quite carefully. And when you kind of do a study of what happens if there is continued decline in real estate investment, if you look at what sectors are affected by that slowdown in property development, Obviously, the construction sector is going to be important. Some financial service sectors, some other manufacturing sectors that produce inputs that go into housing construction and refurbishment. It turns out that the countries that are most affected are those that are exporting minerals and raw materials to China that are used in the construction sector or in the materials that go into construction. So Mongolia, for instance, which exports a lot of coal, some iron as well to China, that country economy would be relatively more affected. Taipei, China also relatively more affected, but the effects are not huge. And overall, when we run this analysis through all of the supply chain linkages and which countries the goods are coming from, we find that a modest downturn in the real estate investment doesn't have a huge effect on growth in the rest of the region through that channel. I think the channel that is more concerning is if a significant decline in the real estate sector leads to kind of a much broader loss in confidence by consumers, by investors, and those could have broader effects.
Now, you mentioned it, this is a problem which is quite difficult to fix. Now, the Chinese government has been trying to stimulate demand among consumers by easing access to loans, by lowering interest rates. Is that the way forward?
I think the response is a sensible one. China had very tight regulations on real estate investment or purchases of new housing because in an earlier period, prices were rising very fast and they were trying to avoid overheating. And now that we're seeing the opposite trend with prices kind of going down, especially in second-tier cities, not as big a problem yet in first-tier cities, it's natural to kind of take the reins off those controls so that citizens who really would like to buy housing but maybe have some limited financial resources. I mean, even now, the down payment rates after the reductions that the government passed last month are still 20% for first-time home buyers and 30% for second-time buyers. That's still below previous rules of 30 and 50%, but much higher in many countries in the world, and still should prevent kind of over-leveraged borrowing by households to finance housing purchases.
Now, on a positive note, South Asia, led by India, will be the fastest growing region there as public investment in India remains strong and will continue to drive growth. Tell us what is working in India's favor currently, according to your assessment.
I think India, we're seeing a lot of confidence by both investors and consumers. It's led by government policies that are really significantly increasing public infrastructure investment, which should raise productivity and crowd in private investment. And coming out of the pandemic, there was a very healthy sentiment among consumers to spend money, invest money, and this is a virtuous cycle that hopefully will continue. We're expecting it to continue. Our projection this year, as you know, 6.3% growth this year and similarly high growth rates next year.
Now, India's Prime Minister and the Indian government, for that matter, held the G20 summit in Delhi recently. Chinese state and party leader Xi Jinping skipped the event, didn't go to India, to Delhi. What are we to make of that? Only weeks after India, China and others agreed to expand the BRICS group to give the bloc more international sway.
Well, it's hard to read the tea leaves of exactly why Xi Jinping decided not to attend the G20 meetings in India and also the ASEAN meetings earlier in Asia. But I think what we're seeing is a lot of the rising and large emerging market countries are trying to really stand up for their own interests in terms of keeping an open multilateral trade and investment system going that has been beneficial. And I think both India and China are part of that group. And I think many other countries in the region, certainly in Asia, also feel that way. They would like to maintain open trade and investment relations with all countries. And this would support kind of healthy economic development. And in fact, we're seeing in Asia, I think, increasing regional economic integration, supported by agreements like the RCEP agreement, the Regional Comprehensive Economic Partnership Agreement, where increasingly value chains are becoming more complex and investment and trade patterns are becoming more interlinked within the Asia region. And that includes China, and hopefully will increasingly include India in the future as it becomes a more important economy.
Albert Park, Chief Economist at the Asian Development Bank. Albert, thank you for your thoughts.
Thank you.
Now, staying in the region, U.S. companies are less optimistic about their outlook operating in China. That's according to a survey by the American Chamber of Commerce in Shanghai. The poll showed a continued downgrading of China's importance as an overseas destination for investment, even though 2/3 of the 325 companies responding said they had no immediate plans to change their China strategy. Tsou Tzung-Han in Taipei can tell us more. So why is U.S. confidence in doing business in China falling?
Well, in fact, at the beginning of this year, the U.S. was optimistic about doing business in China after Beijing took various measures to lift the COVID-19 restrictions. However, the recent economic data released have made them very uneasy. Not only did China's economy not rebound as expected, but the three locomotives of import and export, consumption and investment are all weak. So with the lowest youth unemployment rate and the cover-up afterwards, and China's real estate giants in financial crisis, China's economic outlook is simply just not good. And U.S. businesses are facing more uncertainty. At the same time, tensions between China and the U.S. are running higher and higher. It's only natural that there is chilling effect and the U.S. confidence in doing business in China is falling.
Now, is this having any real-world consequences? I mean, is there less investment? Are companies relocating?
Yes, of course. The slowdown in China's economic growth, regulatory uncertainty, and tensions with other countries have led to a sharp decline in foreign investment inflows into China. In the last 2 quarters, the total foreign direct investment of China was at its lowest level. With global investors' interest in China cooling and supply chains continuing to shift, Southeast Asian countries' economies are expected to overtake China in total foreign direct investment next year, and regionalization will continue to be a trend in politics and policy making. Not just that, foreign investment to India will also extend steadily over the next 5 years. So it's having some real-world consequences.
DW correspondent Tsou Tzung-Han in Taipei. So, thank you.